Welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories in blockchain development. I'm your host, Solidarity. Today's blockchain landscape is buzzing with transformative developments that span technological breakthroughs, regulatory milestones, and market movements. These stories collectively paint a picture of an industry maturing at an accelerated pace while navigating complex challenges and opportunities. Let's explore these narratives in depth, examining not only their immediate implications, but also their potential ripple effects across the broader ecosystem. The trading debut of Infinity Grounds AIN token on Binance Alpha marks a significant convergence of artificial intelligence and blockchain infrastructure. By enabling developers to build decentralized applications through natural language processing and agent collaboration, this platform could dramatically lower barriers to Web3 development. $2 million seed funding underscores investor confidence in its vision to create a decentralized, censorship-resistant environment for AI agents. Market impact speculation centers on whether this integration of AI and blockchain will attract a new wave of developers, potentially shifting resources away from traditional smart contract platforms. If successful, it might accelerate the emergence of agent-centric development models, though the long-term viability hinges on proving real-world utility beyond conceptual frameworks. Meanwhile, Hyperliquid's native token Hype has surged over 7% this week, fueled by its perpetual exchange enhancements like cross-margin features and permissionless markets. The platform's focus on low-latency trading infrastructure positions it as a credible challenger to established players like DYDX. With a 227% three-month gain, this momentum suggests traders are betting on decentralized derivatives platforms capturing market share from centralized exchanges. The market impact could manifest as intensified competition in perpetual futures trading, potentially driving innovation in risk management and fee structures. However, volatility remains a concern given the token's recent peak, and sustained growth depends on maintaining trading volume momentum amidst fluctuating market conditions. Sui Network's comparable weekly gain reflects its strategic positioning in GameFi and NFTs, highlighted by its kiosk NFT protocol launch and growing TVL. The move-based architecture's scalability advantages appear to be resonating with developers seeking alternatives to congested networks. Despite a monthly dip, its three-month uptrend suggests investors view Sui as a long-term contender in the Layer 1 race. Market implications include potential pressure on rival ecosystems to enhance throughput capabilities, while Sui's success could validate the Move programming language's viability beyond its DM origins. The key uncertainty lies in whether it can sustain developer migration as Ethereum's scaling solutions mature. Pepe's unexpected resurgence illustrates the enduring influence of meme culture in crypto markets, with its 7% weekly gain outpacing established tokens like Dogecoin. Whale accumulation patterns and speculative trading on major exchanges appear to be driving this movement, though the token's lack of fundamental utility makes this rally particularly fragile. Market impact analysis suggests such surges could divert capital from projects with substantive use cases, creating ephemeral liquidity bubbles. The sustainability of this trend remains dubious, as meme coin rallies historically correlate more with social media sentiment than technological progress, potentially exposing retail investors to disproportionate risk during corrections. Legislatively, the upcoming crypto week in the U.S. House of Representatives represents a watershed moment for regulatory clarity. With bills like the Clarity Act and Genius Act on the agenda, the focus is on establishing comprehensive frameworks for market structure and institutional engagement. The explicit attention to the $190 billion stablecoin market through the Clarity provisions signals recognition of stable assets' systemic importance. Market impact could include reduced regulatory uncertainty, potentially unlocking institutional capital that has remained sidelined. However, the political compromise required to advance these bills might dilute their effectiveness, and the timeline for Senate approval remains ambiguous. Technologically, Botanix Mainnet launch addresses Bitcoin's long-standing programmability limitations by introducing Ethereum-compatible smart contracts with 5-second block times. This Layer 2 solution could catalyze Bitcoin's DeFi ecosystem, leveraging its unrivaled security and liquidity. With backers like Galaxy Digital and Fireblocks, the federated consensus model represents a pragmatic approach to decentralization. Market implications include potential value accrual to Bitcoin through enhanced utility, possibly narrowing the gap with more programmable blockchains. The success metric will be whether Botanix can attract meaningful TVL away from established DeFi chains without compromising Bitcoin's core security principles. Bitcoin's bullish July projections draw strength from historical data showing an average 7.56% return this month, coupled with its correlation to the S&P 500's record June close. Analysts highlight a consolidation pattern since December 2024, suggesting an impending breakout similar to previous cycles that delivered 30 to 40 days of accelerated growth. The market impact could include renewed institutional interest if Bitcoin breaches $112,000, though such a move might trigger profit-taking from long-term holders. The inverse relationship between extended consolidation and explosive breakouts remains a critical dynamic, with options markets likely pricing in asymmetric volatility. The blockchain group's strategic treasury expansion adds 60 Bitcoin to its holdings, now totaling 1,788 Bitcoin worth €161 million. CEO Adam Back's participation signals high-profile endorsement of corporate Bitcoin strategies, while the €4.1 million ATM raise demonstrates institutional capital inflow mechanisms. Market implications extend beyond this single entity, potentially normalizing Bitcoin treasuries among European public companies. The 1,270% year-to-date yield showcases Bitcoin's asymmetric return profile, though replicating this performance requires precise entry timing. This model could inspire similar treasury strategies if accounting standards evolve to accommodate digital assets. Bitcoin's network fundamentals reveal a market efficiently absorbing selling pressure, with on-chain data indicating rapid redistribution from weak to strong hands during recent collections. This resilience reflects growing market depth, allowing larger positions to be absorbed without catastrophic price impacts. The market impact includes reduced panic during corrections, potentially diminishing the severity of future bear cycles. However, this stability might also compress volatility, affecting trader profitability strategies reliant on large price swings. The maturation signals a transition toward asset class behavior, but could dampen the speculative appeal that historically attracted retail participation. Prediction market dynamics present a fascinating divergence, with Bitcoin showing 82% odds of new highs by December 2025, while Solana's prospects dimmed to 27% following its June pullback. This contrast highlights how investor conviction varies dramatically across assets, possibly reflecting Bitcoin's status as a macro hedge versus Solana's reliance on ecosystem growth. The market impact could include capital rotation into Bitcoin if it breaks records, though Ethereum's 24% odds suggest lingering scalability concerns. These markets function as sentiment gauges, but their predictive power remains untested in black swan scenarios. That concludes today's Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.